so much. Great to be here, but today is hopefully not about Lehman, but about much more exciting topics over the last couple of years. Most importantly, I want to welcome our guest of the hour, Kristina, who, of course, as you can see, has been the CEO and CPO of Nuri, but more importantly, she has worked in fintechs and digital commerce for many years. She has been at N26, she has been at Zalando, seen some of the unicorns in Europe and Germany being created and being scaled, worked in the industry before, and of course, does much, much more as a teacher, as a Founders Foundation member and a key driver in the German fintech scene. So really looking forward for the next couple of minutes of talking to you. We're still figuring out in an agile development what setup we're going to have here, but very much looking forward to this. But Kristina, over to you. First and foremost, maybe not the way you expected to be here 6 months ago, so let's get right into it. Can you tell us a little bit about what happened? What are the key learnings for you, which you saw?
Yeah, I mean, let's address the elephant in the room. For the people who are not familiar with Nuri, we filed for bankruptcy last year in August. Had 3 months to basically work it through with our insolvency administrator, and then in the end, after 3 months, decided to liquidate the company, which has happened at the end of last year. So, but the more important question is obviously, how did we even get there? And I have a lot of employees, friends, journalists asking me, Kristina, what was the mistake? And I'm like, I would like to give these simple answers, but the world is a little bit more complex and it's not that simplified. There's just a lot of things coming together, coming from very, very, very poor timing, a little bit too bold and too bullish decisions the years before. And then also, some things that actually were not even in our hands anymore. But yeah, what happened? I think if I would sum it up in a nutshell, in 2021, I mean the year of crypto, it was a time when we went through big repositioning to basically being able to cater a more mainstream audience. That was also a time when we actually attracted 2 new investors and also had a funding round. But it was also a time when, retrospectively now you could say it was naive. Was it a little bit of arrogance? Was it a little bit of being too bullish, too convinced? We decided together with our board to basically just do a small funding round to be able to actually do a larger funding round at the end of the year. Back in the days, you thought you would be able to time the market. If you tell that to a startup in 2022, they cannot even believe it. But it was something which I retrospectively, when I look back with the knowledge and the experience we have today, obviously you would not do again. So what happened then? So basically we wanted to go out in Q4. Things take a little bit longer. In the end, we decided to move our fundraising to Q1. And if you remember last year, what happened is in January, crypto winter started. So we could definitely feel that in our revenue, we could feel that in our runway. In February, so basically we had to adjust our financial planning in general. It was not the problem alone. In February, I think 1 or 2 weeks after we started our fundraise, the war started. So suddenly all the VCs we had been in conversations for months that knew us very, very well said, hey guys, we actually have to take a step back to understand what was this crisis, what does this war even mean for us? So at the same time, we started our cost-cutting programs. In March, everyone came back. The same VCs, basically, that told us a few weeks before, if we can make our case even more aggressive and more high growth, came back and said, hey guys, can you become profitable this year? And we're like, well, I mean, we were quite a significant size already. So we had to change our strategy completely, move into also dual track. So maybe an M&A track is the right thing for us, because obviously last year and this year is a year of consolidation. It all started quite well. We had mass layoffs, went through everything, but then Celsius, one of our partners from the US, basically started to freeze our customers' funds. And it was such a big reputational issue in Germany that it basically harmed not even the fundraising process, but especially the M&A process as well. I think there's a lot of things that were coming together. Some were driven by very, very poor timing. Some of them were driven by our decisions that were sometimes a little bit too bullish, too bold, but reacting to a market environment that was very common in the past years. And I think in the end, the whole Celsius story, which is quite an interesting fact because it was big in the news in Germany. But the fun fact, interestingly, was that the customers affected were still buying Bitcoin with us until the very last day. So that was also quite an interesting fact, how the external reputational effect can basically harm whatever you do, even though it doesn't really financially affect your business itself. So there were a lot of things coming together that were unfortunate, to say it in a nice way. Guess that was more or less the story summed up, yeah.
I'm looking into the room and I see many fintechs, I see some investors, I even see some unicorns, so to say. Hindsight is always 20/20, but are there things where you would say you would do differently, or what you would give to the founders of today?
Yeah, I mean, first of all, don't try to time your fundraise. And this is the advice what I still see with startups today, where I say, like, don't be too bullish, don't be too naive, don't be too, maybe even you could say a little bit arrogant. The second thing is, I still believe there's enough funding, there's enough dry powder out there for startups that have solid growth and maybe a low cash burn. Or are very capital efficient. Another thing, I'm currently consulting a few startups, and some of them just recently received funding, and they show me their hiring plans. And then I see, oh, they want to double the team size. And I also say, guys, this is not how you scale a company like in 2021. Actually, the question should be, who is in probation? Do you need these people? Do they really perform? And how can you actually still shrink your team size and stretch your runway? Because we don't know how this crisis, how long it will still be. And you need to be able to be self-sufficient as long as you can before you go in a crazy growth period.
I mean, one thing when you mention founders, fintech and starting up fintech is always about people. Also very curious to hear a little bit, how did the Nuri people feel about that? What happened to them? Do you feel proud of the way the process was handled?
So, I think if I really, really look back and someone asks me what are you most proud of, is basically the team that we hired, that we could attract talent from Silicon Valley, from really, really big companies. And also that in the end, we still had an attrition rate of, after we filed for insolvency, our attrition rate was still below 4%. And I think the way how we treated our employees is like as adults. Often the management treats their employees like little kids as they would be in kindergarten and cannot deal with reality. And I think this is the biggest mistake you can do. Because what we always did is, already in January, I told them, guys, the market is crashing, our revenues are crashing. So this is kind of the action we have to take. And this is what we did all the time. So basically analyzing the market, tell them what it means for us and how we react to it. So for example, once we had the mass layoffs, I can remember we communicated it to the team. We obviously involved our middle management to do it in a very human way. So everyone can understand, can digest it. And we were super supportive. And I came down in the office and there were a group of people that we had to let go. And this group of people came to me and said, hey, Kristina, can we ask you how you are feeling? Because it must be a very hard day for you. And I think this was kind of the attitude of our employees until the very last day, that they were very understanding. And even once we filed for insolvency and we had some players over that were about to acquire the company eventually, everyone was very engaged and motivated until the very last day. So I'm really happy for every other company and employer, maybe a traditional financial institution that can hire those people because they have a very special knowledge. And it was a great bunch of people with a great culture.
And from you personally, what would have been the biggest change for you as a leader? I think one of the things that always says in the darkest hours is where you learn most. Certainly was true for me 15 years ago. But also curious to hear a little bit, what's your reflection on your time there, on your leadership style, what you would do differently?
So I think first of all, I'm to a certain degree grateful that I could go through both phases of a CEO, both extreme phases of like hypergrowth, funding, all the, let's call it the good sides of the coin, but also through the hard times, because this is how you get a very well-rounded profile as well as a leader. What I learned is, you might need very different people as well in a growth phase where you basically lead more by vision and mission, and you need to inspire people, and you need to involve them more. You need to be less top-down, but once you enter a crisis, you have to lead very differently, and the people that can lead by vision and mission are not necessarily the same that run your cost-cutting programs, for example. And this is just a very different style of leadership. Some people can handle both sides, some people cannot. This is something where I would react a little bit quicker, I would say. In general, I would make way more harder decisions in the first 4 weeks in a job. Because if you don't do the very hard and tough decisions in the first weeks of your job, it's very hard to do them later on. And yes, it's great to get advice, and it's great to get advice from people who are very experienced. But sometimes, no matter what, you have to do what your intuition tells you. And this is something that you tell young leaders often, don't do it, you need to back up everything with data. But in the end, what we're doing here, and the crises we're going through, Corona, now the economic crisis and so on, there's so many new things that no one has ever done before, and in the end you're the face of a company, you take the responsibility, so take the action that you need to do.
It's interesting. If we go towards the external world, I mean, we're seeing fintech valuations are probably down 50 to 60%. If I'm taking the glass empty point of view, also fundraising is down quite a bit. Half full is, of course, we're back at the level of 2019, 2020. What's your feeling? What does it mean into the future? Where are fintechs gonna play a role, and how is the next 18, 24 months gonna look like?
Yeah, I think, first of all, let's start with the crisis that we're currently in, because everyone says, oh, fintechs are in a crisis, but I fundamentally believe that crisis usually brings opportunity. It sounds a little bit like a shallow Instagram quote, but in the end, what I really mean by it is there's a lot of traditional financial institutions, banks, credit unions out there that are suffering to be able to actually attract tech talent, blockchain talent, people that know the industry well, but at the same time can work in an agile manner. So I think it's a great way to hire that talent in and finally work on this digital transformation, which is still missing out in a lot of traditional institutions. Because you can see that the talent from fintechs are looking for more stability, for more consistency. And I think it's a great way actually to bring the knowledge of modern banking core systems into larger, bit more conservative traditional institutions. So I think there's a big opportunity at the moment, but at the same time, large companies, mid-cap companies, everyone is trying to optimize their bottom line at the moment. So basically being more efficient, that also means that fintechs that are focused on cost efficiency, on automation, maybe the bit more boring stuff like fraud and risk management and so on. I think there's still a lot of tooling missing. There's still a lot of processes that are manual. So I think this is a great chance for fintechs to specifically go into those niches. And be successful.
It's great to hear. I think we got lots of conversations today on payments, wealth asset management, on tokenization, etc. coming up. I do wonder two more things. Number one, if we look around us, and I mean ESG was mentioned this morning already a number of times. I talked last night with someone here on investing into woods, for instance. What role do you think fintechs are going to play here? Do you think it's going to be really disruptive? Is it a few committed few and the rest say we need to do it?
So I still believe that it's a big chance for Germany to really bring in innovation and really show that we can actually build tech, that we understand our industry, that we can have a big advantage also by being a regulated environment that is playing by the rules and that can do that in a very secure but still very modern and efficient manner. However, I think the next 12 to 18, maybe 24 months, I don't know, I haven't checked my crystal ball this morning, but we don't know how long the crisis will go, and that's why I think it's still a great opportunity for larger financial institutions and fintechs coming together, maybe starting to work together in the upcoming months. I also do believe that fintechs, they need to just work in a very different manner, become more capital efficient, need to survive. But it's a great chance, for example, either also for PEs coming in through their platform companies and maybe buy fintechs that are currently maybe a little bit trapped in their valuation or cap table trap, so if you want, basically often they have good management teams, they have a good technology, so I think it's a great opportunity for larger companies, for larger institutions to get in and go the next steps, the next month maybe together.
Thank you. Overall, I mean, we heard many fascinating things about the story of Nuri, some personal lessons of you on talent and the outlook on fintechs. I think the last question, and I think this is to you, if we're standing here in 12 or 18 months' time, do you see a new unicorn having arisen, something to do with maybe sustainable funding, actually working on a different matter, or do we think we're still going to be in a situation like now?
This is a very big question, and as I told you, I haven't checked my crystal ball this morning. But what I do believe, so first of all, I think through the raise of interest rates, I think there's a big chance also a comeback for challenger banks in general. So I think here we have good examples, obviously in Germany. I think it's, we will see where this journey will go, because I still fundamentally believe that the younger generation, a more international generation, requires different services. And I also still believe that the traditional banks are not keeping up with the fintechs, just when it simply comes to a design or user experience. It's my personal opinion. I'm using a lot of them, and I still do not understand how in 2023 we're not keeping up like that. So that's why I think there's a big chance for challenger banks still moving forward. I also believe that fintechs that are really managing now to get through this winter, that are building for cases for efficiency, for fraud, for regulation, for security, that there's a big niche and opportunity here where we in Germany are often at the forefront, where we always give a good example also in terms of regulation, and can have an innovative advantage, so if you wish.
Thank you, Kristina. So I think lots of stuff to think about it. Especially I do want to lead us to the next agenda point. Where fintech's going to go, what's valuations going to do, where do we see the next disruption and change going to happen? I think ESG is definitely one of the main topics, as you just mentioned, and I think it's over to the next point on our agenda. Thank you so much on this.
Thanks.
And thanks for listening.